the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3, and it's now time for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares rose this morning after a U.S. trade court blocked U.S. President Donald Trump's Liberation Day tariffs from going into effect. So if we look at the Straits Times Index, it opened 0.2% higher at 3,919 points after 102.5 million securities changed hands in the broader market. Now let's take you through the closing numbers. The STI ended in the green as well, up 0.13% at 3,916 points. In terms of value turnover, we are looking at 1.26 billion Sing dollars. Gainers outnumbered losers, 309 versus 170. Top advances for today, we've got for you GMX USD, SGX and Cortina, and top decliners we've got here DBS, UOB and Ascend Bridge. Well, in terms of counters to watch, we've got CapitaLand Ascendas Reit because it reported today that it had raised 500 million Sing dollars from a private placement of 202.4 million units priced at 2 Singapore dollars and 47 cents each. Meanwhile, from Nvidia's forecast beating earnings to Meta's chief Mark Zuckerberg touting the tech giant's generative AI assistant at the firm's annual gathering of shareholders and telling them that it is used by 1 billion people each month across its platform. We've got more corporate headlines in focus. And joining me on the line today is David Chow, director at Azure Capital. David, welcome.
Hi, Tintian. Hi, everyone. Good Thursday.
Good Thursday. And David, let's start with U.S. this time around. I suppose some good news as well because U.S. trade court overnight, Wednesday U.S. time we're talking about, it blocked U.S. President Donald Trump's Liberation Day tariffs from going into effect. We are talking about the Manhattan-based Court of International Trade, and it reportedly said that the U.S. Constitution gives Congress exclusive authority to regulate commerce with other countries that is not overridden by the president's emergency powers to safeguard the U.S. economy. A lot of things going on and lots to unpack, but what do you make of the move? Can it override Trump's orders, or can Trump override the Congress orders, and how did global investors react to the news?
We're looking at how the futures market are looking right now. You know, we have the Dow Jones up 1+%, Nasdaq up about 2%. I think global investors are certainly positive to the news as of now. So the question is, will this in any way, spell the end of Trump's bid to reshape global trade to the advantage of the U.S.? I think we have our doubts still for now. On their part, they say it will be appealing the ruling. So there's a sequel to this or even more. We may see the involvement of, an appellate court and potentially the Supreme Court. And the ruling doesn't affect, Trump's first-term levies on many imports from China or sectorial duties planned or already imposed on goods. So I guess Trump could invoke other authority to impose his tariff on other sectors or countries as he did in his first term. I think in recent months we have seen how he has used national security powers to impose duties on imported steel, aluminium, and cars, and even launch investigations pertaining to things like pharmaceuticals, lumber, and critical minerals. Also thrown into doubt, will be, now that, this challenge is going on, what would be the outlines of the trade deal that, Trump recently concluded with the UK earlier this month? The potential pact cost for the 10% tariff on all imports from the UK that could also be could now be void, if Wednesday decision, continues. So, the part where we have our doubts will be, the global economy stands to face definitely stronger headwinds from more twists and turns in the U.S. trade policies.
Do you think that the damage from Trump's comments have already been done regardless of the ruling, though?
Has been done. I would say let's see how the U.S. market opens and unfolds throughout the day.
Okay. Now back to Singapore as usual, David. How did the STI fare today? Any surprises when it comes down to the biggest movers, and how far did the STI track regional peers?
I think on a slider, longer time period, the sell in May and go away phenomenon doesn't apply to the stock market this year, despite all the uncertainties. If I look at the key U.S. indices, the three main ones, they're up anywhere between 3.5 to 9.5% this month. I know we still have 2 more trading days before the month of May is officially over, but I guess we can safely assume that these gains simply won't be evaporating over these past 2 days. And for STI, I think has been strong this month. It's up I think around 1.8%. But on the broader scale, it still underperforms regional peers. If we use reference such as the MSCI Asia APEX 50 as a reference, I think this index, I look at it this morning, was up I think 6% month to date. So in SGD terms, not that surprising because STI is supposed to be a defensive market for most parts as compared to regional. So with the rise of the index at 0.1% for the day, STI has gained about 0.7% for the week. Not bad. It's definitely holding its own.
Okay, now zooming in on some of the counters to watch, David, we've got here CapitaLand Ascendas Reit, because the REIT reported today that it has raised 500 million Sing dollars from a private placement of some 202 million units, priced at 2 Singapore dollars and 47 cents each. How significant is this then for CapitaLand Ascendas Reit, and how did investors react to the news?
I think the market has been expecting the REIT to execute on such deals for quite I think for about 1 to 1.5 years now. So with this move finally being executed, I think this will give an uplift to its SG data center AUM. I think performance-wise, we are likely to see its distribution per unit and NAV accretive. I think it's projected to be up 1.36%, I think, and 3.5% respectively, with the gearing relative unchanged. So investors kind of have the best of both worlds. And most importantly, the purchase actually increases the REIT's presence in Singapore by about 7% percentage point to about 67% of its AUM, and of course it also increases its exposure to tech tenants such as social media, I think e-commerce and financial institutions. So if we drill into the details, I think the first year net property income yields are fairly attractive at I think 7.2% for the DC, and I think about 6.1% for the business park. So, and going back to the DPU of increase of about 1.36%, I think it's also based on the cost of new debt at a low of 3%, and for this we are also seeing the WALEs, which is the weighted average lease expiries, are short, and the growth potential exists, from the under-rented assets, and there's a potential for additional power capacity and lease step-ups. So with that, gearing sort of remain the same as I've said. So going forward, we actually expect management to continue to recycle capital into a higher yielding and newer assets. As such, I think we are looking at a target price of about 280 for this REIT for now.
Okay, and another counter to watch for today, David, is Seatrium, because it announced that its net order book wins stood at 21.3 billion Sing dollars as of March for Seatrium, and this comprised 26 projects with deliveries extending to 2031. How far is this aligned with your expectations then?
The order book size of current 21B, actually, for investors who have been tracking them, is slightly down from, I think, 23 billion as of the end of 2024. And year-to-date order win is about 700 million Sing dollars, including Penta Ocean heavy lift vessels, which they announced in their FY24 results. On our part, we do expect an MOU which was signed with BP for its FPU to be reflected soon in the order book. And this contract could potentially come in at around Sing dollar 1 billion. And going forward, I think a quick look back of the envelope computation sees first Q25 revenue to be around 2 million, and if we just annualize it, first half revenue could potentially come in at 4 billion, and this figure is actually 10% higher year on year. And I think the market will really be looking forward to the second half to see whether they are able to meet expectations of market forecasted 9.4 billion for the year. And for us, our expectation is revenue could come in at just 9-ish for the year. So hopefully there won't be any cost overruns or major execution hiccups for projects on hand. And with that, let's wait and see.
Okay. Now, if you're just tuning in, we're now in conversation with David Chow, Director at Azure Capital. Well, David, in corporate news, Meta's chief Mark Zuckerberg, he touted the tech firm's generative AI assistant at its annual gathering of shareholders. Now, he told shareholders that it is used by 1 billion people each month across its platforms. Now, Zuckerberg noted the milestone anew as the social media giant vies with Google, Microsoft, OpenAI, and others to be a leader in Gen AI. How would you assess Meta's competitiveness in the Gen AI space and consequently the outlook for the company?
I think I remember in early May when Meta announced its first Q results, I think it mentioned that there will be an increased capex for AI infrastructure, from US, 63 billion to about USD 66 to 68 billion going forward, or roughly a 10% increase. So what we have seen in the first Q is that the AI driven part for advertising has led to better targeting, ad content, while noting that new ad recommendation increased conversion rate by 5%, and for this it translated into a 30% incremental increase in advertisers using AI creative tools. So this is a plus for them. And we have also seen better engagement where in the past 6 months improved to recommendation systems have also led to 5 to 7% increase in time spent on Facebook, and correspondingly we're also seeing increased time spent on Instagram and also on Threads. And for Threads, I think if I remember correctly, it's more than 350 million monthly active users, versus just 300 at the end of FY24. So Google has been so Meta has been doing well to monetize, with ads, really ahead of expectations. And in terms of business messaging, like WhatsApp, yes, 3 billion monthly active users. It's a really a fertile ecosystem for the AI agents, whereby AI agents can now allow business to scale customer support and sales through automated messages, rising productivity in the meantime. So I think management also noted that in emerging markets like Thailand and Vietnam, messaging apps already drive meaningful commerce, and it should spread to developed markets with the help of AI. So for us, we see the company's long-term user growth, diversification geographically and across platforms. AI is also providing a lot of opportunities for them, and provide some defensiveness given the current tariff situation. So I think for Meta, we actually have a target price of about 700 for now, and we have actually trimmed it slightly to reflect higher capex assumptions.
Yeah. Okay, and finally, David, Nvidia's latest earnings that remain in focus today. If we look at the AI chip titan, it posted better than expected earnings and revenue for the quarter ended. Okay, it's a very awkward date, 27th of April 2025. Now, if we look at overall revenue, that stood at $44.1 billion, up 69% from a year ago. I believe expectations were for around 66%, if I'm not wrong. But in particular, the data center revenue jumped 73% from the level seen a year ago to reach $39.1 billion. What do you make of the latest numbers? And perhaps the second part of the questions, if consumers are front-loading their chip demand, for how long, or front-loading their chip orders, for how long can Nvidia keep up with that good performance?
Right. I think firstly, the previous fear of the effects of the China ban of the HDD chips was less impactful as expected. And I think on the revenue side, it's a slight bit to Bloomberg consensus, which was expecting like 43.3 B, and this expectation has been revised down, versus like 48 B just about 1.5 months ago after the HDD ban was announced. And if I look at people from the buy side here, they're actually expecting around 45 to 46 billions, and more recent sales side reports are also estimating around 44 billion. So market players, from all three sides seem to be fairly close with the estimates for this latest result. And before this release, some preliminary estimates also implies that the lower revenue range for the July quarter can reach 41 billion, and as of this morning, this has been revised upwards to 45 billion. So from our end here, from a longer term perspective, we see Nvidia continue to impress with its GPU roadmap, like the Blackwell Ultra ramping up in second half this year, and the Rubin GPU in the second half of next year, also powered by the next gen Vera CPU. It's continual investments in nascent market opportunities, from the recent pledge investment in Saudi Arabia and UAE UAE, and its continual diversification strategy, shifting towards partnership with new cloud providers such as CoreWeave, Nebis, and Lambda. So overall, with the I think geopolitical concerns appear to have lessened a bit for now. I think we continue to see Nvidia as the leader in AI processing, but we believe a lot of this has been priced into their share price. You can see, considering that it has risen 30% for the past month.
I see. Lots to watch as usual. Thanks so much for the insights, David. That was David Chow, Director at Azure Capital. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.